Hi everyone and welcome to today's morning report on Monday the 8th of June with me, Rich Perry, market analyst at Handtech Markets. European markets are fairly corrective again at the open, round about just continuing really this theme of the last few days, and the strengthening dollar that we had on Friday didn't really do much for equity market sentiment, and that came as the strong non-farm payrolls report sort of extended or sort of created expectations that we may be having to look back towards September, October now, again as the point at which the Fed potentially could be hiking interest rates. And the markets are generally not, well, certainly equity markets are not happy about that. Certainly that drove a strong dollar trade on Friday, and that's to a certain extent has corrected today. There have been comments attributed to President Obama this morning that suggested that a strong dollar is a bit of a problem for the States. But what we have seen on this dollar move is just at the end of last week we had a couple of days of strong gains of the dollar, slight correction today, nothing too significant, and I'll talk about the impact of that happening on the charts today, maybe even a selling opportunity on some of these pairs. But obviously big focus will remain on the German bund yield, and that's higher again today, continues to find support above the 0.8% breakout, which I find is very interesting because I think that is just suggested that we're going to having an outlook of a continued upside maybe, and it could even turn into a bull flag again, another bull flag, so watch out for that. But very interesting moves that we're seeing on the German bund yield. However, what we do have at the moment is this payrolls related dollar strength that we've had since those numbers came out on Friday afternoon, and a very slight correction on that move, but nothing too significant. There's no real economic data out today. You've got the G7 meeting today. You may well have an impact of some sort of announcements from there, but nothing that the markets are expecting anyway, and other than that, no major economics announcements due. So it could well be that the first part of this week we just continue this theme of dollar strength that we've seen, and that this slight little uptick on some of these pairs could well be a chance to trade that dollar move once again. In terms of my charts today, it's the euro yen. Interestingly enough, the euro yen had this big breakout in the last week, breaking through that 137 big resistance there, and that is sort of 137 back to 135.25. It's a massive sort of pivot level on this euro yen chart. Big old pivot level band there. So the fact that we've broken above that now suggests that we're sort of back into far more bullish territory, I think, on this chart. Above all the moving averages, momentum indicators also strong for configuration, slightly corrective near term because we've had this shooting star candlestick that we had on Thursday last week, so there is a slight corrective move, but I would say that any weakness that you get in this chart I think is going to be a chance to buy now, because it would just be unwinding some of this strong run higher back towards that breakdown, that breakout if you got it around 137, but certainly it would be a near-term correction rather than a major correction. I think it would be giving you a chance to buy the euro yen, because this move continues to. Sorry, that's annoying. Just reset that. Yes, this move just in the last few days is just minorly corrective. I wouldn't say it's got any real selling pressure behind it. So you'd look at this chart, this intraday hourly chart, and say, well, okay, you've got a strong support first initially obviously at 137, which is that breakout, and then further higher you've got around 138, and then again around 139. So seems to be that euro yen works on big figure levels at the moment, so that could be worth keeping in mind. But certainly anything that sort of unwinds this euro yen, maybe even back towards 138, 139, would be deemed to be, I think, a chance to buy, because even on these hourly momentum indicators, still very strong momentum. RSI holding nicely above 30. MACD lines have unwound below neutral, but I still think that the configuration generally on this chart is still very strong, and any corrections would be seen as a chance to buy for further gains in due course, I believe. In terms of the resistance levels, just zoom in here, you're looking out for that peak that we saw on Friday, that peak coming in around 140.70, and then that's around Thursday's peak of that shooting star candle at 141.05, if you're going to get exact. But certainly that is the near-term resistance level, 141.05. But certainly at the moment, corrections seem to be a chance to buy on this chart, and I would be using any weakness as a chance to do that. So I wish you good luck in your trading on Euro Yen today, and I will speak to you later. Thank you.